What's up guys? For today's video we're going to go a little bit more in depth on fibs. So the reason why fibs work is because algorithms use these mathematical equations. You know, these mathematical equations happen a lot of different places in the natural world, but algorithms tend to use it, and algorithmic trading makes up a decent part of the overall trading today, you know, what we see in our everyday trading. So some things, you know, we need to understand when it comes to fibs would be what a swing low is, what a swing high is. Another great video on fibs is from one of the people who's inspired me to use fibs. That would be Akron Trades, AKRIN. I'll tag him in that video in this if you want more in depth. But how I use them mainly is using intraday ranges. And what I've noticed lately is the day before, when we are in a trend day or an upward trend, in this case, you know, we are in an upward trend. As we see, we broke out here and have some decent movement to the upside. These first 5-minute to 10-minute candles tend to bounce off of the prior day's golden zone, which is, just throw up a fib on here. Golden zone would be that 382 down to the 618. Some people include that 786. Perfect, cool, you can do that if you want. I prefer just leaving it as simple as possible, using this zone here, looking for potential area where I'm looking for a pullback entry. And another thing, you know, to keep in mind with that is price action, and candle type is very, very important as well. If we're looking for puts, we want to see a rejection at this golden zone. If we're looking for calls, we want to see some long lower wicks, tweezer bottom at that golden zone. So first, you know, get back to that swing high, swing low. Basically what a swing low is the low point of that impulse move before a bigger move upwards. In this case, we had the gap up, but we'll use this lower here as our swing low. And then swing high is that first initial cause of an impulse move in the opposite direction or a reversal. In this case, we'll use that top up there. TrendSpider's fibs are a little bit different. I have them on reversed right now, I believe, because it just seems normal. Like if I'm doing this normal, it's going to be the opposite way when I want just this. So for the zero move is going to be at the bottom. The one, or I guess the zero move is that first impulse move, can either be a swing high, swing low, depending on which way you have the fib set. And then the one will be that reversal sign. This moves a little bit, changes a little bit intraday, but in terms of, you know, looking for an uptrend, zero at the bottom, one at the top, looking for that pullback to golden zone here on the hourly, looking like, you know, 405 down to about 400 would be that golden fib zone pullback. But this is how I use it more, and we'll use the daily time frame. I'll flip over to the 15 just because it does give me, you know, avoid a little bit of the chop. Don't have to look at so many candles. I'm gonna throw this on as well. It gives us day break. So what I was talking about here is, you know, if we use, let's just use our first breakout all the way down here. If we use this using the daily range, crazy, you know, that next day, where's our pullback spot? That 0.5 fib level perfectly holds it. Awesome, nice, cool, love to see that. But what caught my interest is this happens more than one time. So if we do the next day, let's see, the next day would be right here. We gap up. On gap up days, it doesn't tend to follow as suit. As we see here, you know, that daily high does become a bounce spot later on, but we'll remove that. Gap ups and gap downs, obviously they change a little bit, so it's harder to get that 618 or that golden zone area for being able to get a pullback entry at that spot, but it can happen. Looking at, you know, look at yesterday here. What was that? Friday, excuse me. If we use this, so really small zone, right? But that pullback zone is right at the top of our golden zone. So all I do when using this is looking in that first 5-minute candle. If we get a nice rejection or a nice bounce, depending on what, I could use that to a quick scalp. Later on in the day, once we start to retrace a little bit, I'm just going to use the zone or the daily range from that day to give me a golden zone in which I'm going to look for calls, put entries. And I use this on top of orb. Orb I like to use more earlier on in the day, but once we do have that first rejection of price, And a reversal, that's when I like to use that 618 to the 0.382 as a nice entry spot for pullbacks. So, we talked about swing high, swing low here. Using the daily range, same thing. Here I'm on the 5 minute. We have our swing low here right off open, cool. And then we have our swing high right here when we do see this reversal. So where would I look for a potential call entry? Would be in here. The reason I wouldn't take this entry in here at this candle is we have some pretty decent sell-off in here. And as we saw earlier from the previous day's trading range, let's remove this. So the previous day trading range, got to flip this back on. If I do this down to this, that was actually right at our 0.382, 0.5, 0.618 would give us the golden zone. We get our retracement there. Very high conviction add for puts here. We do have a nice trend earlier in the day, right? Pushing up, pretty strong market. But we have 3 signs of slowing up. We have this first longer wick, second one, and then the third is an inside with a longer wick, and then we break to the downside. If we don't like that, we have a nice retest entry spot here. A lot of denials again at that 618 before we ultimately crater down. And the great thing about this is it makes things super simple. I have a range where I'm looking for. I can use those candle and pattern types, and I really don't even need EMAs. I can use Fibonacci levels and straight price action to be just okay. I think it honestly might be better without the moving averages, but I like to throw on those EMAs because it does help me stay in plays longer, as well as kind of identify what the trend is, and I use that trend to size in accordingly. So just like time frames, Fibonacci's on the higher time frames are going to mean more and therefore do tend to hold more significance. So in this case, if I'm using the 5 and I'm entering on that, we'll flip back to the 65. Where would I look to enter into an uptrend? So if we use this swing low here to this big move up here, where am I looking to go long? I'm looking to go long about 6, in here. I want to see some sign of reversal, however, or some sign of support forming. In this case, it does look like we have a bit of a trend line here, have respected it, and then it looks like we're finally starting to see some downside. We turn these levels up here into resistance now. We still have support. So where am I looking for a bigger move here? In order for looking for puts, I'll take, underneath that 409, I don't even know what this low is, 409.6. Okay, cool, perfect, right? Looks like, the bigger move is going to happen about 409. And then we have a nice potential down to 407. And then I would say, that 405.85, which is that golden zone, that 618 level pullback. Nice spot to enter, look to enter for calls. As we see here, we don't have very much in terms of a volume profile. So I would expect more down towards 400 to be a very, very high confidence entry spot to go long on some calls, just based off of the simple use of Fibonacci levels. That's how I really, really like to use them. But let's go back and look at how we could apply this on, let's see, what Friday, of course. Remove this real quick. All right, so what I do here, right? So I can use this orb early, the first 15, cool, perfect, awesome. All right, where would my entries be? First, we get a close above, second close above and hold. This could be an entry spot. Get a quick retest if you're really, really fast with it. Nice as well. If you're waiting solely off of those fib entries and don't like either of these entries, want to wait on a retest, we can see here failed. Put trigger had to be a very, very fast move as well. And it does move down pretty fast. But as we can see here, this golden zone is respected very, very well for call entries once we do have that reversal and trend. This is just based off of the orb level, right? But how I'd use, let's go back to the orb. That kind of got ahead of myself there. Anyways, so for the orb, I'm entering in here, right? If I enter on this candle here, my second close above, my first target is going to be that 618 level. We hit it really nice. Perfect. I don't really have any reason to sell, besides to scale out until we start to see some selling come in. Any of these 3 candles, good spot to scale out and then set your stop loss. For me, I would set that underneath this 1.618, that 413.3. And for contracts, that's going to be dependent on what you're playing. If you're playing 0 DTs, these are going to move faster, so you're going to have to keep that stop a little bit tighter, or else theta can eat away at that, especially if you're not moving much. You know, these 3 candles, this could drop 10-15%, relatively little to no move, but that theta is eating away at those options. All right, so once this is kind of set up, you know, I have a nice sign of reversal. This is where I use, whoa, I do not want that. This is where I use those fibs based off the daily range. So low to high, of course. And where am I looking to get long? Where am I looking to get short? In this case, we have a nice uptrend here early in the day, and we do get these pullbacks. But I still need to use those candle types, right? I'm not going to enter this. We talked about this earlier. Heavy selling pressure early. That isn't a great spot to me. I'd like to see the support hold before entering. And then we fall right through pretty easy. We did have a very, very fast move up early, but then we can look for better or more reasonable entry spots. We have all these spots in here, right? We have a tweezer bottom, higher low, push up. Same thing here, tweezer bottom, higher low. And then this is that denial off of yesterday's range, which I'll talk a little bit more about that here, and why I really started using fibs and what this back test consisted of. Using the day before's range to use that first 5-minute candle as a potential scalp. So let's just look here. Let's go back to this day here. If we have a low to a high, awesome. See the next day. So our next day would be what? The August 3rd. Let's look at August 3rd here real quick. So if we look at August 3rd, where are we looking to enter? So if I use yesterday's range, yesterday's fib range, I'm looking to enter between 409.16 and 410.61 into calls as we were in an uptrend. In this case, we get a perfect, picture perfect retest, 2 long lower wick candles hitting right off that zone, and then we do get that continued push up. You know, it's not a one-time thing, which is why I like to use it, and it kind of just gives me some insight looking for that quick scalp early, but also potential entry spot as well. So let's just use August 3rd's price action. So if we go to low to high, then we look at the next day, which would be August 4th, of course. So what am I doing here? We are in an uptrend as well. As we see early, denied pretty heavy, and then we're looking our bounce spots right here, 412.17 and 413.51. We get multiple, very, very choppy days, so it's a little bit harder. Does work better with trend days, as do most things in the market. Most strategies, trend days are a little bit easier to see, you know, what's happening, what's going on. So in this case, a ton of different retests. In this case, you know, we have a tweezer bottom, tweezer bottom, tweezer bottom, and consolidation for little pushes up. These are a bit harder to stay in, a bit choppier. So it is a bit harder, but it's a great place to just look or have a general sense when it comes to support and resistance or key levels that need to be held. And oftentimes, you know, these fib levels equate to pretty key levels from the prior trading days. So I really like to use fib that way. It gives me a very, very simple way to look at price action, a very, very simple way to just look at a region in which I'm going to enter or look for a possible entry, still using candle type to help dictate if that's a justified entry, whatever it may be. Another, you know, very, very important thing there to keep in mind is the prior trading days, whatever, you know, way it went. So say we had a bull day, I want to use the low to the high. If we had a downtrend day or a bearish day, I want to use the high to the low, looking for a pullback to that 618.382 golden zone as well. Same thing, you know, just flipped. And the where you anchor the fibs is the only difference that's going to be made there. Can be a little bit different, but once you start to put it into play, you start to notice some things. And I think the general best part about it is just looking and giving that good region and consolidating all the horizontal lines we might have on a chart into just 3 simple ones. And then just using price action, using whatever we know about trading stocks, about price action, all that good stuff, help us make a more detailed and a better entry spot where we do have more conviction in our trades.